What's up, ladies and gentlemen? Welcome to the Beat of Business with me, Ravi Wadden. And in this video, I'm going to compare two excellent Vanguard ETFs against each other. In one corner, we have VOO, which is Vanguard's S&P 500 Index Fund ETF. And in the other corner, we have VTI, which is Vanguard's Total Stock Market Index Fund ETF. There has been a long-standing debate whether or not VTI or VOO is the better long-term investment. And in this video, I'm going to put that debate to rest for the time being. To be completely honest, both of these ETFs are excellent investments and could be a core holding in just about anyone's portfolio. Honestly, if I was a billionaire and I could only make one investment for the rest of my life, I would take VTI or VOO and I would be completely happy with that decision. But the reason you're here is to find out whether or not VTI or VOO is the better long-term investment. So let's jump right into the video. And just as a heads up, this video isn't going to be as scripted as some of my other videos, just because I'm going to be using screen record because I want you guys to understand the process that I use to evaluate both of these ETFs so that you can do it on your own for these ETFs or any other ETF that you choose. With that, let's jump to the screen so that we can do a full review on both of these ETFs. So I went ahead and put both of these ETFs on the screen for your convenience. We've got VOO, the Vanguard S&P 500 ETF on the left, and we've got VTI, the Vanguard Total Stock Market ETF on the right. And before we get started, one thing I want to make clear to everyone watching this video is that both of these ETFs, VOO and VTI, are also available as mutual funds. Now, as you'll see here, it says also available as an Admiral Shares mutual fund, also available as an Admiral Shares mutual fund, and you can just hit this and hit here, and it'll take us to the mutual fund equivalent. So the mutual fund equivalent of VOO is VFIAX, which is the Vanguard 500 Index Fund Admiral Shares. And the mutual fund equivalent of VTI is VTSAX or VTSAX, the Vanguard Total Stock Market Index Fund Admiral Shares. Now, there's a separate debate of whether or not you should buy index funds as a mutual fund offering or whether you should buy index funds as an ETF offering. Now, personally, I prefer ETFs, and let me show you why. So if you look at VFIAX, for instance, the reason that I don't like the mutual fund offering, at least when it comes to Vanguard mutual funds, is look at this. The expense ratio is 0.04%, and the equivalent, which is VOO, has an expense ratio of 0.03%. Not a big deal, but why would you pay more for the same fund? The bigger reason is the investment minimum. So you need $3,000 investment minimum to invest in VFIAX or in VTSAX. And I think this is true of all Vanguard mutual funds. I'm not sure, don't quote me on that, but it's definitely true for VFIAX and VTSAX. And the third reason that I don't like investing in mutual funds is because when you buy a mutual fund like VFIAX or VTSAX, you have to use the Vanguard platform. Conversely, when you buy the ETF version of these funds, VOO and VTI, you can use any brokerage platform of your choosing. You can use Fidelity, Schwab, M1 Finance, Webull, it doesn't matter. So for me, I like going with the ETF offerings because I just use the same platform that I use to buy stocks. Now let's move ahead to the product summary of these two funds. And as you can see, I'm still on the mutual fund page because the product summary is just way better for the mutual funds. So for VFIAX, which is the Vanguard 500 or the VOO equivalent, the product summary states, as the industry's first index fund for individual investors, the 500 Index Fund is a low-cost way to gain diversified exposure to the U.S. equity market. The fund offers exposure to 500 of the largest U.S. companies, which span many different industries and account for about 3/4 of the U.S. stock market's value. The key risk for the fund is the volatility that comes with its full exposure to the stock market. Because the 500 Index Fund is broadly diversified within the large capitalization market, it may be considered a core equity holding in a portfolio. Now, if we look at the product summary for VTSAX, which is the same thing as VTI, I'm just reading the mutual fund summary because it's better. It says, created in 1992, Vanguard Total Stock Market Index Fund is designed to provide investors with exposure to the entire U.S. equity market, including small, mid, and large cap growth and value stocks. The fund's key attributes are its low costs, broad diversification, and the potential for tax efficiency. Investors looking for a low-cost way to gain broad exposure to the U.S. stock market who are willing to accept the volatility that comes with the stock market investing may wish to consider this fund as either a core equity holding or your only domestic stock fund. Now let's go ahead and read the product summaries for VOO and VTI so that you guys get a better idea of what these funds invest in. So So for VOO, the product summary states, invests in stocks in the S&P 500 index, representing 500 of the largest US companies. The goal is to closely track the index's return, which is considered a gauge of overall US stock returns. Offers high potential for investment growth, share value rises and falls more sharply than that of funds holding bonds, more appropriate for long-term goals where your money's growth is essential. Now the product summary for VTI states it seeks to track the performance of the crisp US Total Market Index. It goes on to say large, mid, and small cap equity diversified across growth and value styles. It employs a passively managed index sampling strategy, and the fund remains fully invested, and low expenses minimize net tracking error. And while these product summaries are great, I do think that the product summaries for the mutual fund versions of these two funds are a lot better. Okay, moving on to the expense ratio. VOO has an expense ratio of 0.03%, and VTI has an expense ratio of 0.03% as well, which can also be converted to 3 bips. And for those of you that don't know what a BIP is, 100 bips equals 1%. So 0.03% is 3 bips. If this was 0.1%, that would be 10 bips, 0.2%, 20 bips. You guys get the point. Now, this is where the two funds really differentiate themselves in portfolio composition. As you can see, VOO has 505 stocks, VTI has 4,100 stocks. The median market cap for VOO is $165 billion, so those are pretty massive companies in terms of the median market cap. And the median market cap for VTI is $122.9 billion because this fund invests in US large, mid, and small cap funds, so VTI is going to have a smaller median market cap. If we move down to the PE ratio, VOO has a PE ratio of 20.2 and VTI has a PE ratio of 19.3. And if we look at the turnover rate, VOO has a turnover rate of 2.3% and VTI has a turnover rate of 4%. And if you look at the fund's total assets, both of these funds are massive. VOO sits at $766.3 billion and VTI sits at a whopping $1.2 trillion. And if we look at the style box, which Vanguard provides us, both of these funds are large cap blends. Now, when we look at them on paper, VOO and VTI are extremely different, right? VOO has 500 stocks and VTI holds 4,100 stocks. But as you'll see as I go through this video, they are actually much more similar than you think. Now, if we look at the holdings, top 10 holdings in VOO are Apple, Microsoft, Amazon, Google, Tesla, Google, which is Class C shares. We have Berkshire Hathaway, Johnson & Johnson, United Health Group, and NVIDIA Corporation. And the top 10 holdings for VTI are Apple, Microsoft, Amazon, Google, Tesla, Google Class C, Berkshire Hathaway, Johnson & Johnson, United Health Group, and Facebook. Now, as you'll notice, the top 10 holdings in both of these funds are very, very similar, but the percentage or the weight of each one of these stocks in the fund kind of differ depending on which ETF you go with. Now, VOO, since it's more concentrated and it holds 500 stocks, Apple makes up 6.53% of the fund, and VTI, which holds 4,100 stocks, Apple makes up 5.55% of the fund, but it's still the largest holding. So to summarize this section, VOO tracks the S&P 500 and VTI tracks the crisp US Total Stock Market Index. So VOO consists of 500 stocks, and VTI holds those same 500 stocks as VOO, but it invests in 35 or 3,600 more stocks. So VOO, all large cap stocks. VTI, got large cap, mid cap, and small cap stocks. Now in the next section of the video, I'm going to the ETF Research Center, ETFRC.com. This is the homepage, and if you scroll to the left-hand side, it says ETF Tools, and you can actually go to Fund Overlap. And once we click on Fund Overlap, this is a really cool fund because you'll be able to see how similar both of these funds, VOO and VTI, are. And again, I'm showing you guys this so you can see my research process so that you can do the same thing with whatever funds you want to do it with. So Fund 1, I'll type in VOO. Fund 2, I'll type in VTI. Now, as you can see, the number of overlapping holdings are 502, and that's because VTI holds all of the same funds as VOO, plus an additional 3,600 funds. And it says 99.4% of VOO's 509 holdings are also in VTI. And then it says 13.2% of VTI's 4,073 holdings are also in VOO. Now that makes complete sense since VTI is more diversified with 4,100 stocks compared to VOO's 500 stocks. But this is where things get really interesting. If we look at overlap by weight, VOO and VTI have an overlap by weight of 84%. So even though VOO holds 500 stocks and VTI holds 4,100 stocks, both of these index funds are market cap weighted index funds, and for that reason, 84% of their holdings are exactly the same. And that's why I was telling you guys, these funds are more similar than you think. Even though one holds 500 stocks and one holds 4,100 stocks, if you look at their weightings of stocks, they are 84% alike. You get some messages over there.
Yeah.
That's my wife.
No, we're not leaving that in the thing.
She's always interrupting my videos. Can't get anything done with you, Zua. So I hope you guys found that helpful. You can go to ETFRC and you can use a bunch of their ETF tools, which I find extremely helpful. So now let's go ahead and test the performance of these two funds to determine which fund is the better long-term holding. And for this test, I'm gonna be using Portfolio Visualizer. So let me take you guys to the screen. Here's Portfolio Visualizer, and it's a great way to back test portfolio asset allocation. And again, I'm doing this video in more of a live format so that you can see what tools I use to compare these two funds. So let's go ahead and compare VOO versus VTI. Now, time period, I'm gonna leave it at year to year. Start year, we'll do 1985. End year, we'll do 2022. Include year to date, no thanks. Actually, yeah, let's go ahead and include year to date, why not? Initial amount, let's just do $10,000. Cash flows, none, we'll just do a $10,000 investment that happens, at the beginning of the timeline with no additional contributions. So we'll rebalance annually, leverage type, none, reinvest dividends, yes, display income, no, factor regression, no, benchmark, none, portfolio names, default. Okay, down here what I'll do is I'll type in VOO, Vanguard S&P 500 Index Fund, and then Asset 2, I'll type in VTI. So we got the Vanguard Total Stock Market Index Fund ETF. So portfolio 1, I'm gonna do a 100% allocation, that's 1,000. And then portfolio 2, I'll also do a 100% allocation. We'll scroll down and hit Analyze Portfolios. And now we have our portfolio analysis results, January 11th to June 2022. And it says that the time period was constrained by the available data for the Vanguard S&P 500 ETF VOO. You can extend the available time period by using Vanguard 500 Index Fund Investor VFINX, which is the oldest share class of the fund. And it says, note that the month-to-date results for the current month are not available under the free tier. I'm not paying more, that's fine. But this is a great tool, and as you guys can see, we're just gonna be going back to January 11th or January 2011. Now, if we scroll down, we're gonna get the portfolio returns. And as you can see here, the initial amount invested was $10,000 on December 31st, 2010. And they're pretty much neck and neck, not much variance the whole way through. We've got some slight variance here around the, and then if we go up and down and we end with the Vanguard S&P 500 ETF, that $10,000 that we invested in 2010 is now equal to $37,613 versus VTI's $35,925. Now, if we want to look at this in greater detail or in a different format, we have initial balance of $10,000 for both funds, and here's our final balance. 37,613 versus 35,925 for VTI. So win to VOO. We have a compounded annual growth rate of 12.21% versus 11.76% win for the Vanguard S&P 500 Index Fund. Standard deviation of 13.83% for VOO versus 14.33% for VTI. Now this is really interesting because well, we can actually, let's get back to this. Okay, best year for the VOO was 32.39%, and the best year for VTI was 33.45%. The worst year, so winner here is VTI. The worst year is 19.95% negative, and for VTI it's negative 21.32%. So the winner here is VOO with the VTI having the larger drawdown. The max drawdown is exactly the same as the worst year. And this is really interesting because as you'll see, over the past 10, 12 years, VOO has performed much better. It also had a lower max drawdown. But the interesting thing is that it has a lower standard deviation, which is a measure of volatility. So when you consider the fact that VOO actually has better 10-year or better performance since December 31st, 2010, and it has a less of a drawdown in its worst year, it still has a lower standard deviation. And if we go ahead and look at the annual returns by year, you'll see that 2011, VOO did better. In 2012, VTI did better. VTI did better in 2013. In 2014, VOO did better. In 2015, VOO did better. 2016, VTI did better. 2017, VOO did better. 2018, we've got VOO did better, going down 4.5% versus VTI's 5.21%. In 2019, VOO returned 31.35 compared to VTI's 30.67. In 2020, VOO returned 18.29 versus VTI's 21.03. And VTI did worse with a return of 25.67 versus VOO's 28.78 in 2021. And so far in 2022, VTI has the bigger drawdown. Vanguard S&P 500 ETF VOO is only down 19.95% versus VTI's 21.32%. So as you can see, in the majority of the years, VOO has done better. Now, if we look at the trailing returns, you're going to see much of the same story. Over the last 3 months, VOO has done better, only being down 16.11% versus 16.82% for VTI. Year to date, same story, 19.95 versus 21.32. The 1 year performance for the S&P 500 Index Fund, it's down 10.59% versus VTI's negative 14.17%. So winner VOO. 3 year performance, winner VOO, up 10.6% versus VTI's 9.63%. 5 year performance winner VOO, up 11.28% versus VTI's 10.53%. And the 10-year performance number or winner is also VOO, 12.93% versus 12.52%, and a full 12.21 versus VTI's 11.76. Now, based on the comparison that I just did, I think we have a clear winner, which is VOO. So over the course of this video, VOO had the better returns, it had the lower volatility, and it generated more income for you as an investor. So at least as far as this test goes, VOO is definitely the clear winner. But as you guys noticed, I only back tested these portfolios to 2010, and who really knows what the future holds. Now, some people will argue that VTI's broader diversification will help it going into the future, as small and mid-cap stocks tend to outperform the market. But others will argue that VOO and its 500 large cap stocks is all the diversification that you need as a US core equity holding in your portfolio. But as you can see, being diversified isn't always a good thing. In my opinion, sometimes VTI seems a bit too diversified, and that's why I think VOO has outperformed it since 2010. But again, you don't have to invest in one or the other. If you want, you can invest in both. Nobody's stopping you. But with that, I'm gonna call it a video. I hope you guys got value from this video, and if you did, please let me know in the comment section below, and please like this video, and please let me know what you think of this format where I'm kind of going live. I will try to be more efficient in the future, but let me know what you think of this format. Thank you all for watching. I'll see you all next time.